Today, we will talk about the top 10 stocks for retirees to invest in. Buying when everyone is selling pays off in the long run. It isn't a coincidence that most well-known and respected investors are contrarians. Thus, if you are looking for a retirement portfolio that you wish to hold for the long term, now is the time to buy these discounted stocks. 1. McDonald's. McDonald's, NYSE is a very recession-resistant stock and is one of the few stocks to have increased in value during the Great Recession. Even in 2020, MCD recovered very quickly despite being a restaurant chain, one of the worst affected sectors of the economy. Simply put, McDonald's thrives in an environment of economic uncertainty. It is a solid business in a consistent long-term uptrend, making it a perfect stock if you wish to avoid volatility. 2. PepsiCo. If you want something more diversified, look into PepsiCo, NASDAQ PEP. The company's diversification strategy makes it a very stable business. Not only that, PepsiCo is diversified into many consumer staples brands, making its revenue sources very inelastic and resistant to economic downturns. Like McDonald's, PepsiCo is on a solid footing and will remain relevant for decades. The company's financials will reflect just that, as it is on a stable, long-term uptrend, with revenue reaching $83.6 billion TTM the last quarter, up 8.8% year-on-year. Moreover, PepsiCo has an annual dividend yield of 2.56% and reported a net income growth of 21.5%. With robust top-line and bottom-line growth, PEP is undoubtedly among the best stocks to buy for retirement. 3. Shopify. Shopify, NYSE is a Canadian e-commerce platform that rose rapidly after the pandemic. From February 2020 to its peak in November 2021, Shop stock grew by 218%, but it has had a dreadful year in 2022. YTD, the stock is down just slightly above 70%. However, the trend seems to be reversing, as it is up 56% from its bottom of $25.06 after beating Q3 expectations. Its top line grew at 21.6% in Q3, beating expectations by 2.3%, while its losses also beat expectations. That is great for the stock, as robust top-line growth will encourage Shop to be valued at a higher premium. Shopify has had exceptionally robust top-line growth since its IPO, and its elevated valuation throughout 2021 was due to its YoY revenue growth of nearly 100%. With the same metric on the march higher, investors won't mind paying more for the stock. The Bank of Canada also hints at lower interest rate hikes as the economy cools off. 4. Meta Platforms. Meta Platforms, NASDAQ NTA, is a stock many investors view negatively due to the metaverse project going poorly. The stock is down more than 65% YTD, as Meta spends extravagantly on a project only a handful of people are excited about, and it's not something many would consider among the best stocks to buy for retirement. However, I am not at all convinced that Meta will be a failed company. The metaverse may seem silly today, as it is in the very early phases of development, but there is no guarantee that it can't still turn out to be profitable a decade or so down the line. It simply might be ahead of the curve. 5. Netflix. Netflix, NASDAQ NFLX, is another tech stock battered by the bear market. Down 48% YTD, it has pulled off a strong recovery after introducing more revenue sources and improving its monthly active user, or MAU, count. Despite the recent surge in its price, it is still a stock with much more upside in the future due to slowing but consistent revenue growth and steady subscriber count. I argue that NFLX stock seems very oversold when comparing the stock price to pre-pandemic metrics. In Q4 2019, Netflix's subscriber count was 167 million, and quarterly revenue was at $5.5 billion. The stock price then was around $320. Fast forward to Q3 2022, with the subscriber count at 223 million and revenue at almost $8 billion. The only thing that hasn't changed much is NFLX's price. 6. Texas Instruments. Admittedly, I was pessimistic about semiconductor stocks after the demand for GPUs fell. However, all of them have beaten their revenue expectations and continue to grow. For example, TSM's revenue growth has surpassed even 2021 metrics, and even Warren Buffett is buying after the news. While TSM stock surges higher due to demand, I also expect GATSETS and TXN stocks to be great long-term bets. They could even outperform Taiwan Semiconductor due to the CHIPS Act. They are both American companies that qualify for billions in subsidies. Of course, these stocks naturally move with the rest of the market and could see more downside. However, if you are looking to hold long-term, semiconductor stocks are among the best stocks to buy for retirement. Texas Instruments, Taiwan Semiconductor, and Global Foundries reported YoY top-line growth at 13%, 36%, and 22%, respectively. Those are robust numbers that'll make these stocks continue to trade at a premium. 7. Qualcomm. Although Qualcomm, NASDAQ QCOM, and Broadcom, NASDAQ AVGO, are considered semiconductor stocks, they do not manufacture a meaningful amount of semiconductors. Instead, they design semiconductors and manufacture them through partners such as TSMC. They produce and sell a variety of technological products. These stocks have outstanding financials and are undervalued despite the recent stock market rally. Broadcom has revenue growing at 25% YoY. The robust growth should cause AVGO stock to trade at higher levels in the long run. On the other hand, Qualcomm is even more undervalued, with a price-earnings ratio of 11x and 22% YoY quarterly revenue growth. 8. Alphabet. Alphabet, NASDAQ GOVGO, is undoubtedly among the best stocks to buy for retirement, as the internet is incomplete without this company. As many of my colleagues have already pointed out, Alphabet owns the two most popular websites on the internet, Google.com and YouTube.com. With GOOG and GOGL stock declining 32+ YTD, I consider Google a low-risk, high-reward investment. GOG and GOGL stock trading below $100 is a once-in-a-lifetime buying opportunity. Alphabet is an evergreen business that is arguably the best tech stock to buy for long-term gains. 9. Microsoft. Microsoft, NASDAQ MSFT, is another evergreen tech stock that is among the best stocks to buy for retirement. If you are a white-collar worker, you are almost guaranteed to have used a Microsoft product. You might even be reading this article on the Windows operating system. My argument is that this company is essential for most people and won't be going under the radar anytime soon. It's elusive at best to run a business without any Microsoft products. 10. Walgreens Boots Alliance. Walgreens Boots Alliance, NASDAQ WBA, is among the best stocks to buy for retirement, as it lingers at $40 per share, despite a promising outlook. The company is a retail pharmacy business, which much more inelastic than some of the tech companies I've mentioned above. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.